The complete collapse of new construction sales in Canada is not just a forecast anymore, it is happening right now. Massive layoffs are sweeping the real estate industry. Projects aren't just being delayed, they're being canceled entirely. Marketing firms with decades of legacy shut down, and that is only the beginning. New condo sales continue to fall off a cliff, and with 12% of Canada's workforce tied to real estate, the knock-on effects will be devastating. Plus, we're looking at tens of billions of dollars in lost tax revenue, a ballooning deficit, entire sectors at risk. This isn't fear-mongering, it's a wake-up call. And unless significant action is taken now, the consequences could reshape the entire real estate industry and our country for years to come. Let's take a look. My name is Dan, and I lead a top 1% real estate firm here in Vancouver. And new construction isn't just something I sell. It's an area that I live and breathe in. We have a dedicated project sales and marketing division, and I have helped dozens of clients both buy and sell new construction homes. My wife works for one of the largest developers in Canada, and a close high school colleague of mine is actually now president and CEO of one of Vancouver's largest development firms. This world is my blood, and today I want to give you a brutally honest insider look as to what is happening within this industry. First off, let's dive into how bad the new construction sales really are, as the sales volumes paint a stark picture as to what is about to happen within the housing industry. Starting with the knock-on effects that are already being felt by people on the front lines of real estate, namely salespeople and property marketing firms, plus architects, of course, plus the developers. And now the story is turning to those within the construction industry, where we are starting to see the initial layoffs and an increase in the unemployment rate. But you know who's going to feel it the most? It's actually the federal government. And sure, while your initial reaction might be, oh, boo-hoo, this will have wide-reaching and negative effects on our country. I want to frame up this episode by looking at the front end of this problem. That is, of course, the new construction sales. In Toronto, which is understandably the country's largest real estate market, the decline has been the most pronounced. Just check out this chart. There has been a complete collapse of new construction sales. In fact, they are the worst on record. In the first quarter of this year, pre-construction condo sales were lower than the same period in 1995. That is a 30-year low in sales. And this is with 50% more people now living in that area. In 1995, there were 4.2 million people. Today, that number is over 6.5 million people in the GTA. In other Ontario regions, such as Kitchener-Waterloo and Hamilton, the annualized pre-construction condo sales for the 6 months ending in March were about 84% lower than the 2020 to 2024 annual average. And that data comes from Altus Group. Ottawa's annualized sales were 70% below that average, while Montreal, Edmonton, Vancouver, and Calgary were down between 62.5% to 50% lower. And that is just for Q1 of this year. Since then, the trend has actually gotten worse. In the month of May in Toronto, there were just 42 new construction sales that took place. The monthly average, 2,000, a complete and utter collapse. So how did this come to be? Or why is this happening? Well, a quick backstory shows us that GTA was one of the hottest real estate markets as recent as just 3 years ago. And it's really important to note that the majority of pre-construction or pre-sale homes, namely condos, are predominantly purchased by investors. This makes a lot of sense, knowing that the average investor has no problem waiting 3, 4, 5, 6 years for that investment to materialize, right? They buy it pre-construction, they wait until it's done, they pay for it then. An end user, on the other hand, not really in the mood to wait 3, 4, 5 years to get the keys to their new home. End users typically want to move in within a couple months. So pre-construction is for investors. And since that time, 3 odd years ago, the landscape has changed dramatically, making real estate investing go from lucrative to basically a money pit. Real quick, here are the 5 most glaring reasons as to why this has shifted so dramatically. When we had essentially a decade plus of almost 0% interest rates, mortgages were very cheap and very easy for investors to access, pushing up their assets and their ability to buy more and more. So they did. They jumped on the opportunity to buy. Because of the low interest rates, their ability to cash flow was greatly increased. When that interest rate went from 0 to 5%, completely different landscape, and those margins evaporated. Properties no longer cash flowed, and therefore making them less attractive. Next up, of course, is price. Okay, we saw a multi-decade run up in condo prices that made investing in them seem like an absolute no-brainer. But since peak 2022 prices, well, they've come down. In some areas, as much as 20 to 25%. A lot of investors who bought around that peak era, 21, 22, well, by the time those buildings completed, they were well underwater and they were funding to make up the difference between their down payment and their new appraisal amount because the bank was not covering the mortgage to their purchase amount, putting a lot of investors underwater. These stories have shifted from investors talking about how much money they were making to how much money they were losing. That alone will push any would-be future investor completely out of that asset class. On top of this, the cost of construction has skyrocketed, including materials and labor, not to mention, of course, the development costs from the government. Those have been increasing dramatically. Financing rates, of course, are up as they've increased with the interest rate. There is still an immense amount of red tape and levels of bureaucracy to go through at City Hall. Again, these delays are incredibly costly, especially with the new heightened financing rates. Ultimately, the culmination of all these issues has resulted in developers not being able to bring a product to market at a price where investors or even end users have any interest in. It is simply too expensive. Why would you go to a pre-sale presentation center and spend $1,400 a foot, for example, on a new build that'll be done in 5 years when you can literally walk across the street, buy a very comparable unit that's maybe 2 years old for like $950 a square foot? That's an immense delta, and it has a lot of investors asking that exact question, which is why they've basically stopped buying new construction. It has dried up the desire for that type of product entirely, as demonstrated in those charts. It is clearly a complete collapse of that industry, and the effects are being felt already. Here are a few examples. Normally, a visual content creation firm in Toronto, been in business for over 20 years. This is a company that creates renderings and animations and interactive displays, essentially, the marketing assets for large scale developers. Well, their company leading up until 2022 has been in immense demand, right? They create fantastic product and developers would have to wait months and months to even get access to their services. Now, all that has changed and they just laid off 75% of their workforce. Furthermore, Matami Homes, Great Gulf, Polygon Realty. These are among some of the developers that have cut jobs, and pre-construction sales brokerages such as Hearst and Associates have laid off staff. Marketing and advertising company LA Inc. shut down after 35 years in business, while SVN architects and planners made cuts and are not replacing those who have decided to leave. And in Vancouver, it's happening too. West Group, for example, a company of 60 years, well, they've been delaying projects and have just had to cut 12% of their workforce. Rennie Project Marketing was just in the news. 40-year company just cut 25% of their employees. And MLA, another project marketing company, 35% reduction in staff from this time last year. And honestly, this is just the tip of the iceberg. Check this out. This chart shows the relationship between new condo sales and new condo starts. It is a literal crystal ball as to where the new construction industry is headed. You can see that condo starts lag about 18 months behind sales. So if starts have already dropped 50%, what happens in the next 18 months when they drop to 95% like the sales have? This is where the numbers get really scary. There are an estimated 536,000 jobs in the new home construction sector within Canada. With no sales comes no starts, which equals no jobs. And there are so many jobs that are related to the real estate industry. Just look at these, for example. These are all the people that are going to be affected when real estate construction slows. We touched on the developers and project management. Okay, that includes the development firms, construction risk analysis, feasibility analysts, development lenders and underwriters. Then we move into planning, design, and pre-construction, which includes your architects, your engineers, your surveyors, your interior designers. What about the government and municipal services level? City Hall, building inspectors, utility approval staff, affordable housing specialists, land titles registry. And then, of course, the construction and trades area, right? Your general contractors, all your skilled trades, carpenters, electricians, plumbers, drywallers, roofers, tilers, framers. It goes on and on and on. Think about your crane operators, demolition contractors. Next up is materials and manufacturing, right? You've got your concrete and cement manufacturers, glass, roofers, plumbing, steel, paint, appliance, HVAC. The list goes on there as well. What about the logistics and site services, right? You got to get materials in and out, trucking and delivery services, portable sanitation providers, construction fencing companies, all those people are impacted as well. Then, of course, attached to that is the financial and legal element. Mortgage brokers, real estate lawyers and notaries, land use and zoning lawyers, title insurance providers, underwriting teams. As mentioned, we have the entire marketing, sales, and leasing firms. Those are already feeling it immensely. And the people that you don't even hear about are some of the part-time workers that contribute as well. Your photographers, drone flyers, web developers, copywriters, signage companies, they're all affected. Then the post-construction and operations department, maintenance crews, concierge, elevator companies, janitorial, movers, furniture retailers, all affected. And lastly, the secondary and related sectors, which includes interior decorators, telecom providers, everyone at the utilities, right? BC Hydro, Fortis, all the insurance for these homes that aren't being created, home inspectors, appliance installers, landscapers. You get the idea of how immense this industry really is when you take that holistic 50,000 foot view. Every single time a new project does not get built, people from every one of those sectors are affected. These numbers are already starting to show in the unemployment rate, where in GTA, unemployment rate is already up to 9.7%, and that is up from 8.3% just 1 year ago. On top of this, Ontario has shed over 12,000 construction jobs in just the last 12 months alone. The truth is, the research coming from Altus Group shows that a lot more jobs are about to vanish. Economic strategist Peter Norman, well, he estimates there are approximately 536,000 new construction jobs within Canada, and upwards of 170,000 of those jobs are at risk of disappearing. That is 30% of the industry. Basically, 1 in 3 people related to real estate have their jobs at risk today. Outside of the sheer devastation to those workers and their families, what does the loss in tax revenue look like for the government? This is eye-opening because real estate, it's not just a place to live. It's not just an investment vehicle. It is a fiscal powerhouse that contributes over 12% of Canada's total tax revenue. In fact, housing construction and housing related industries generate billions of dollars in revenue for all 3 levels of government. Check out this chart. This is an example of the tax revenues created from building just one single home. For an average priced home in Toronto of about $1,070,000, over $388,000 of that is in taxes and tax revenue for the government. That is 36% of every new home going to taxes. First off, that is absolutely absurd and needs to be addressed. But second, it demonstrates how dramatic the sales slowdown will be on government revenues, especially if they continue to drop downwards of 90+%. Let's look further thanks to this chart, where it shows municipalities in Ontario collect over $4 billion annually in development charges. Ontario's land transfer tax, it generates, again, another $4 billion for the province each year. And Toronto's municipal land transfer tax, well, that brings in an additional $900 million. To estimate the annual loss to governments in the Greater Toronto Area alone, we multiply the per unit tax revenue by, of course, how many units are targeted to be built. And guess what? Under such a scenario, governments would see their annual direct tax revenue fall by about $6.6 billion this year. This is a somewhat rough estimate because, of course, the exact taxation revenue numbers are very hard to calculate. I mean, look at all the knockoff industries that are affected as well. The income tax there alone will be contributed or not to this chart as well. Realistically, these numbers are probably underestimated and only incorporate direct impacts of like reduction in home building. We don't even take into consideration here the loss of jobs through that supply chain, nor do we consider the impact on the employment insurance systems for the tens of thousands of workers transitioning from paying into the system to collecting benefits. That is a huge swing to the government's bottom line. And also, this is just for the Greater Toronto Area. All in, when we look across our country, Canadian governments currently receive approximately $60 billion in total taxes from all forms of real estate annually. If these sales continue their downward trend, and therefore the knock-on effects take place, if the government doesn't do anything to change this trend, tens of billions of lost revenue will be the cost of inaction. This is why we are already starting to see the pleas from the industry to the government to change things. And we can expect to see some radical policy changes within the coming months regarding how and who and how much real estate is going to cost. While all of this has essentially been bad news and a bit gloomy, there will be some good that comes out of this. And this is what I want to touch on next. As painful as today's landscape is, it is going to force a reset. We are in a cost of delivery crisis, and it is pushing the entire industry to evolve. Municipalities are rethinking development fees, construction costs are easing, and developers are shifting focus from investors to real end users. Creativity and efficiency are becoming critical elements to the business. City Hall is slowly starting to cut red tape, streamline approvals, and governments must reduce their staggering 35% tax burdens on new homes. It's the easiest element to cut to make homes more affordable quickly. I think governments are in a position now where they are recognizing that cutting that 35% to lower is a lot better than getting 100% of zero. The result? More livable, family-oriented housing grounded in lasting value and not speculation. Because the real risk isn't change. It's what happens if we don't. Thank you so much for watching. I hope you found this episode helpful. If you are thinking about buying or selling a home or just curious about what's happening in the market, I'd love to chat. No pressure, no sales pitch, just an honest conversation that will help you make the decisions that are important to you and your family. Feel free to reach out anytime. My contact information is below. Thanks and take care.